Hey guys, welcome back to the Financial Freedom Channel, where we make your money work hard for you. So today I'm going to talk about something I've been diving headfirst into lately, and that's real estate markets. What are the top real estate markets in the country for investing in real estate? So that's what I'm going to talk about today. My top 5 real estate markets to dominate in 2018, to dominate your returns. Okay, I've got a number of sources where I compared to determine what these top 5 markets were. There's 2 paid single-family sources. That's Housing Alerts and Local Market Monitor. There's a free multifamily service called Yardi Matrix, and I'll link to that below. Multifamily University, MultifamilyU, did a webinar recently, 2018 Real Estate Trends webinar, and I'll link to that below as well. And also there's a free website called citydata.com that I got some of this info. So let's dive right into it, guys. What are the top 5 real estate markets for dominating your investments in 2018? So the first one, Tacoma, Washington, part of the Seattle-Tacoma Metro. Okay, now Tacoma had a crazy trailing 12 months appreciation figure. So last 12 months appreciation was 15%. That's nuts. 15% appreciation in the last 12 months. Now the forecasted appreciation, and this is according to Local Market Monitor, which is one of my favorite resources for this metro research. Forecasted is 13%. Okay, so 15 the last 12 months. The next 12 months are forecasted to appreciate at 13% for real estate in Tacoma, and these are single-family houses. Okay, single family. It was actually the top metro according to both Housing Alerts and Local Market Monitor. The top metro with a population over 500,000 people. So we've got job growth, okay? Another key figure to understand when you're trying to select a hot real estate market. 3.6% over the last 12 months. So jobs are growing very quickly. We got population growth of 2.5%, which is also quite strong. I mean, job growth is obviously critical because, when there's more and more jobs in a metro, the salaries tend to rise, more people come, so demand increases, right? People are able to pay more with job growth, population growth, there's higher demand, okay? You also want to understand the supply. So how many new buildings are going up as compared to population growth? So these two are incredibly important. Vacancy. So the vacancy rates in Tacoma, 3.4%. Okay. So this is from a multifamily source. That's from Yardi. So if you have a 100-unit apartment building, that means on average you're going to have about 3 or 4 units that are vacant. And that's actually just about the lowest number for any metro across the US. You can check out that Yardi report. I'll link to it below, but 3.4% is super low for vacancy. So that's really good. A couple cons with Tacoma. The Seattle area tends to not be super landlord friendly. It's on the West Coast. It's quite liberal. So you just really want to understand, landlord-tenant law before you get into, especially a multifamily investment in the Seattle area. So really understand the landlord laws. And also, it's a higher price to rent ratio. Seattle, Tacoma is a more expensive market, right? It's a coastal market. So, what you pay for a property as compared to what you're going to get in rent might not be as attractive as some of the inland markets. Your cash flow might be a little bit lower. So you want to understand that as well. Cash flow might be a little bit lower. Obviously, appreciation is super high. You don't want to bank on appreciation when you're making an investment, because that can fluctuate depending on what happens in the economy. So make sure your cash flow numbers work in Tacoma particularly. So that's Tacoma, the number one pick by both Housing Alerts and Local Market Monitor. Number two. So number two is Orlando. And I also threw in that there's two cities near Orlando that are doing really well. Deltona and Lakeland. Now, Deltona is about 30 miles north of Orlando. Deltona is 56 miles southwest of Orlando. So what do we got? 11% appreciation looking back 12 months. Okay. And 12% looking forward, forecasted for the next 12 months. Job growth in Orlando, 3.8% job growth. Okay. 3.8% job growth, super strong in Orlando. Population growth, 2.5% for population growth. Vacancy is a little higher in Orlando. Same with Deltona and Lakeland. Vacancy is 8.8% for multifamily. So you want to make sure you factor that. You always want to factor vacancy into your multifamily analysis, but Orlando, higher vacancy as compared to some of the other metros. Year over year rent growth. This is another Yardi metric. Year over year rent growth. Highest of any metro at 7%. Year over year rent growth. That's looking back 12 months. So that's what was the rent 12 months ago, and what are the rents now? It's grown by 7%. Okay, that's crazy. That is crazy growth, 7%, and that's the highest year over year, number one for year over year rent growth. So multifamily, I mean, Orlando, super attractive market. Now the con, I would say, Orlando has been hot for a while. It's been on a lot of these turnkey real estate companies shortlist. So there's been a lot of rehabbing in Orlando. Pretty hot market. If you're having a hard time finding inventory at the price point you want in Orlando, I would explore these two. A little earlier stage for those two markets kind of surrounding Orlando. So that's number two, Orlando Metro, including Deltona and Lakeland. Okay, so let's get into number three here. 3, Provo, Utah. Right, Provo, you're thinking Provo, Utah. What's the deal with Provo? So Provo is pretty close to Salt Lake City. There's Salt Lake City, there's Ogden, there's Provo. It's kind of this within the Salt Lake City greater metro. And Salt Lake City is going gangbusters, guys. I mean, there's so much tech moving from the Bay Area, San Francisco Bay Area, into the Salt Lake City area, and population is skyrocketing. So we're looking at 10% appreciation, single family housing appreciation, looking back and looking forward, forecasted for the next 12 months, 10% appreciation. Job growth, right, 3.5% growth for jobs. Population growth, 3.1%. That is crazy high, 3.1%. That's by far the highest of any of the 5 I'm going to be sharing today, 3.1%. So like I said, Provo's in that Salt Lake City tech hub. Salt Lake City's one to look at as well, Ogden as well. But Provo kind of edged those out. It was a little bit stronger according to the different sources that I looked at. So that's number 3, Provo, Utah. Number 4, Fort Worth. That's a funny thing about Fort Worth. My brother actually bought a house. He moved to Fort Worth. What was it? Just over a year ago in March of 2017. So he's sitting pretty. I mean, the appreciation on his house, I'm sure he's pleased with that. So we're looking at 11% appreciation. Looking back 12 months, and then we've got 10% forecasted looking forward to the next 12 months. What do we got? Job growth, 2.9%. Okay. Population growth, 1.9%. 3.5% year-over-year rent growth. Okay. Which is strong. You know, it's not a crazy high performer like Orlando was, but it's strong. So really the story in Fort Worth, you know, you've got such a hot market in Dallas right now. There's so many employers moving to Dallas. So Dallas kind of had its boom, right? Prices have already gone up quite a bit in Dallas. And so now people are moving to Fort Worth to try to still be able to afford a house. So that's what's happening in Fort Worth. Dallas is just booming, and people are looking outside of Dallas now. And so that's spilling into Fort Worth. So that's number 4, Fort Worth. Number 5, and the final one on the list here, 5, Las Vegas. Las Vegas. What's the deal with appreciation in Las Vegas? We got 14%. Looking back 12 months, 13% forecasted for the next 12 months. Job growth, we got job growth 3.1%, very strong there in Vegas. Population growth 2.2%, also very solid population growth. Now, year-over-year rent growth. Year-over-year rent growth for Vegas, 6%. So this is actually the number 3 ranked metro for year-over-year rent growth. Orlando is number 1. Sacramento is actually number 2. And then Vegas came in 3rd. Sacramento I didn't like because the price of rent, again, just like Tacoma, is a little bit high. So it's harder to cash flow in Sacramento. But I am also looking into Sacramento personally because it's so close to where I live. So yeah, that's really the story with Vegas. You know, there's a lot of people who are nervous about Vegas because of what happened in the last recession. housing prices just crashed so hard in Vegas because so much of their economy is based on tourism, right? And what happens when the economy crashes? People stop spending money on that stuff. And so Vegas got hit particularly hard. There's concern about a recession kind of around the corner, maybe a year or two from now. There's concern about what's going to happen in Vegas and the real estate market there. But right now it's looking pretty solid. It's looking pretty solid, guys. So yeah, that's what I wanted to share. 5 real estate markets to dominate. Oh, one other thing I want to mention. This is not to say that you can just go to Tacoma, right, and buy a house anywhere and dominate, right, in 2018. In any of these markets, there are good neighborhoods and there are not so good neighborhoods. There are neighborhoods where it really makes sense from an appreciation, from a rent growth, and there's neighborhoods you really want to stay away from. So this is not a blanket endorsement of these metros that you can just go in there, throw a dart at a house, and make a killing as a real estate investor. So also be sure to keep that in mind. Yeah, that's what I wanted to cover, guys. Hit that subscribe button below if you haven't already, and I'll see you in the next video.